So if you ever felt limited by traditional banks, if you've had a deal that made sense but couldn't get approved, or if you have capital sitting idle and you're wondering how to put it to work, this episode is for you. Today, we're talking about private money in real estate and what it really is, who it's for, and what you need to understand before you even consider it. No hype, no shortcuts, just clarity. LeAnn Lyon is here to discuss all of this and so much more. We're going to have so much fun today. So I would love to jump into it. LeAnn, when someone says the bank won't fund my deal, what is actually happening? And it's so good to have you here.
It's so good to be here and be back here. And this is just an amazing topic. But to answer your question, it's a really common question. And it's a little scary for investors when they hear that, when they're coming to me and they say they couldn't get funding. On the surface, it may sound to them like the bank doesn't like me or my deal must be bad. But for the most part, that's not really what's happening. Banks have a box that they like to fit their things into. And it's not always, and what investors have and what they're bringing to the bank may not fit that, tiny box. So traditional lenders are built for clean, predictable situations. They want stable W-2 income, properties that are already in good shape, and timelines that fit the 30 to 45 day process. But in real estate investing, especially with value add properties, that is rarely what we're finding. You might have a great deal on a property that needs work or a really tight closing date or income that doesn't show up in the way that a bank underwriter likes. So the
Right.
investor is looking at a property that makes sense on paper, strong after repair value, a clear plan, and the bank is looking at the file saying, this doesn't fit. And it can happen kind of at the last minute, right after that appraisal, and it starts to feel personal, but it's really about the bank's rules, not the investor's potential as an investor. And it's that gap between a solid deal and a rigid system is where private money comes into the picture.
Oh, amazing. Thank you. That makes so much sense. Now, for everyone out there who might not know, what does private money mean in simple terms?
Sure, that is actually the most common question I get asked. In simple terms, when I say private money, I'm talking about money for real estate deals that comes from private individuals or companies instead of a big bank or a credit union. It's still a formal loan. It's documented, it's secured by property, but the source of the funds is private rather than institutional. So most
Mhm.
of the time, we're talking about business purpose, non-owner occupied properties, things like flips, rentals, small multifamily, or even some commercial projects. And you'll hear the term hard money in the same conversation sometimes, which is one type of private money, but it's typically more short term and very, very deal focused.
Okay, perfect. And how is this different from traditional bank financing? Just can you clarify that?
Great question. Yes, absolutely. So a traditional bank loan is usually slower. It's more document heavy, and that's why it can take 30 to 45 days. It's more focused on the
Yeah,
person.
right. Yeah, it takes so long sometimes.
Oh, yeah, it can be painful actually. But with private money, the focus shifts.
Mm, okay. So, what are more investors looking at beyond banks right now? Or why are more investors looking beyond banks right now? Sorry.
All good. Well, like I said, with private money, the focus shifts and the lender, the private money lender still cares about the person and their experience. They also care about the person's character before they decide to make the loan. But there's a lot more weight on the deal itself, the purchase price, the rehab budget, the after repair value, your exit strategy. And the process
Mhm.
can often move much faster. Sometimes a week or two of straightforward fix and flipping. Let me rephrase that. Sometimes it only takes a week or two to get a fix and flip or bridge loan for those types of things. So we're really talking about three things. Speed, you can get it faster. property condition. So if you are looking at a property that needs a lot of work, there's a lot of banks that don't want to have anything to do with that. Maybe even, like a cracked foundation type thing. The bank's like, nope, we're out. But
Right.
an investor wants that property. And the third one is the flexibility. If you're already self-employed, you own multiple businesses, you're in a transition season, banks are less likely to say, we're going to give you the funding. But private money lenders, some of them are willing to talk.
And so interesting. What's coming up for me is I'm picturing like a private money lender in like a movie, in one of those movies where they're like scary. And that's what it makes me think of when I first think of private money is those movies where there's these actors get private loans and then suddenly they're like there's a hitman after them because they haven't paid it back or the interest rate is through the roof. So private money is sounds risky. That's where my brain went. So what are the misconceptions that
You're, s-
I'm thinking and people might hear?
yeah, you're so not alone on that. Even people very close to me, when I said, hey, I'm going to get into private money, I started getting people sending me like videos and clips and stay away. And I'm like, you know what? So I did my due diligence when I started all this. And the biggest misconception is that it's anything. I think people think anything outside of a traditional bank must be shady, must be dangerous. But private money lenders are not loan sharks. We're not hiding in the shallows. In reality, a vast number of private lenders I meet are super thoughtful. They're values driven people. They're business owners. They are professionals. They're investors who want their money to work harder and often want to fund projects that make a real positive impact in their communities, such as much needed rentals or even supporting recovery housing and affordable housing, which is actually one of the very first loans that I had an opportunity to work through. There is one other misconception about private money, and that's that it's only for people who are desperate or can't qualify
Yeah.
anywhere else. But the truth
Yes.
is many very savvy investors use private money strategically, even when they could qualify for a bank loan because the speed and structure give them an edge. It's a tool, not a punishment.
Mm. Yeah, I think like just like anything in the world, we've been so used to um doing things a certain way. So when you think of a loan, you think of a bank, and then the bank has their checklist of things that they look for, and they don't look at the deal as an individual thing for an individual. They look at it as, okay, well, this is our system and this is how we're going to check it and this is how it works. Whereas private money is more like looking at everything from a holistic way, which is actually really forward thinking. So I love that. If you could clear one of these myths up immediately for someone who's curious but nervous, what would that one be?
Probably the other myth that I hear most often is that working with a broker in this space, which I'm a private money broker, is just an added expense with no real benefit. I do get
Mm,
paid, usually through points or fees at closing, and that shows up on a line item in the settlement statement. There's nothing, it's all up front. But if you only know one lender, then you have no way to compare whether their rate, their points, their terms really are the best option for your deal. Because different lenders will price the very same project very differently depending on your experience, the property, the location, the loan structure. And as a broker, I'm not just adding a fee. I'm adding options. I'm adding strategy. I can look across multiple lenders, compare structure, help you avoid mismatches and things that could really hurt you and your project in the long run. And over the life of the deal, choosing the right structure can save you far more than my fee.
can you clarify what structure means and why do people get into trouble when they don't understand it?
Sure. People usually get in trouble in three places: timelines, terms, and exits. So on timelines, they assume, many of us do. I'm definitely one of the glass half full kind of people. We assume everything is going to go perfectly. No contractor delays, no permit issues, no surprises behind the walls. I mean, if you ever watch those construction shows, there's always something behind the walls, right? So they
Delays,
take the
delays, delays.
shortest, right, exactly. And so they take the shortest possible rehab period and then don't really leave room for real life. So that's the timeline issue. The term issue is they focus on only the interest rate or only the headline points, and they don't look closely at things like extension fees or even early payoff penalties that can happen and how and when the rehab funds are released to them. Really important if you're doing a fix and flip, and what happens if they do need more time. And those details really matter. But the third
Mm.
one is the exits. They start the project, if they start the project without a clear, realistic plan for how they'll pay the loan off, whether that's a sale, a refinance, or some other strategy, they can be in a lot of trouble. So my job is to slow that conversation down in the beginning and walk through those pieces so the deal is set up to succeed and not just to close.
I'm glad you mentioned that because I was just thinking that I don't really know what a private money broker actually does. So, what is your role in protecting both the borrower and the lender?
This is what it makes this such a perfect fit for me because I'm a matchmaker, I'm a translator, I'm a connector, and this is what I've lived my whole life to be. I've always been this. I meet somebody, I've actually had people bring people to me at an event. Oh, I'm so glad you're here. I need you to talk to this person because they need to meet people, and I know you know people. And this is actually the reputation I have. So, this is what I do in private money brokering as well. On the borrower side, I listen to their goals, their experience, the reality of their deal. I help them understand. So I'm also a former, I'll say, recovering middle school teacher. So I help them understand what kind of funding fits, what's realistic. But on the lender side, I'm also listening to their comfort level, their risk tolerance. Do they want to fund really small things with inexperienced people or really, really big things and they don't want to deal with the smaller things? So I take a lot of notes and we call this the lender appetite. And then I'm in the middle, making sure that the deal, the structure, the expectations line up for both sides, and that protects borrowers from taking on terms that don't fit their project, and it protects lenders from getting into deals that really don't match what they're comfortable with.
And then, how is this different from a traditional mortgage broker?
Another great question. There are many similarities, and we're both intermediaries who help find funding, but the world we're working in is very different. A traditional mortgage broker is usually helping people buy or refinance a primary home, a place they're going to live. The guidelines are more standardized. The products are designed for long-term, owner-occupied mortgages. As a private money broker, I'm almost always working with business purpose, investment focused deals. And in fact, the owner cannot live in the property. The lenders are private, the loan programs are more varied, the structures can be quite way more creative. Short-term bridge loans, fix and flip, something called a DSCR, which is fairly similar to a 30-year mortgage, but it's only for rentals, and so on. There's more flexibility, which is wonderful, but it also means that there's more to understand and compare, and that's where my broker role makes a big difference.
Right, exactly. So then, why does having structure matter in this space?
Great, great question, because creativity without clarity is just a mess, and it's where people get hurt. Private money gives a
Sounds
lot
like
of
my
room to
brain
be
right now.
creative. What's that?
Sorry. Sounds like my brain right now. It's like so creative, but no structure.
Yeah. And when you can harness some of that creativity and give it some structure, that's when you're creating art. Is that not true?
Yeah, yeah, absolutely. I
So
love that.
private, yeah.
Okay, go
So
ahead. Sorry, I
yeah, no,
interrupted
no, no,
you.
it's fine. No, so to bring it back to the private money gives us a lot of room to be creative with different terms, different ways to release rehab funds, different exit strategies. And it is a very creative form, which I also love. But that creativity isn't grounded in clear structure, expectations, documentation like you get with the banks necessarily. And in some of those cases, you can also end up with misunderstandings, surprise costs, strained relationships. So, structure is what helps everyone sleep at night. The
Mm,
borrower knows what's expected, the lender knows how their money is being used, and how it will be repaid.
yeah, man, humans really like to know what's going to happen. Uncertainty is like so stressful for people. So this sounds really great. Now I understand my structure is so important. Um, so this is really important. And I think the audience would really love to know who is a great fit for private money.
Okay, great. Private money is a great fit for people doing business purpose, real estate deals that need speed, flexibility, or a structure that a bank doesn't offer. So that might be a fix and flip investor, a buy and hold investor, adding to their rental portfolio, somebody looking for a small multifamily, or even a business owner planning a more creative project like a dog park or a specialized commercial space. A good fit doesn't have to mean super experienced. I work with new investors too, as long as they're coachable, they're willing to learn, and realistic about their numbers. What matters is that they're treating it like a business, they have a plan, they're willing to be transparent, and they understand that there is a risk as well as probably, hopefully, a reward.
Right. Okay. So then who would not be a good fit?
That exists as well. It's not at all a fit for somebody looking to buy a primary residence. I had
Mm,
a person I was working with, and she said, I want to do fix and flip. And then she said, well, actually, I want to do a fix and flip in another state, and I want to live in it while I'm renovating it. And so we went from I want to do a fix and flip, which usually is just a couple of months, to I want to live in it for a year and fix it up gradually over time. That's not a fit. Somebody who wants no risk, no money down. I do get people saying, can you fund this 100%? And
mm.
that takes some creative financing for sure, or it just can't happen at all in some cases. And finally, somebody who doesn't want to be transparent. I still have to ask some very detailed questions, ask a lot of numbers. And if somebody's like, well, I don't want to tell you that, I don't want, that's none of your business, that's definitely not going to work in the private money world.
Right. So thanks for explaining who is not a good fit. And now, what characteristics would make someone ready?
Well, a few things tell me that somebody is ready. They have at least a basic understanding of the numbers, the purchase, the rehab, after repair value, rents, but I'm also willing to help educate people if they aren't really quite there yet. They can maybe explain what their exit strategy is in simple language. They have to know this themselves. And again, I'm here to help educate, bring them along, look at different opportunities because I've seen a lot of different things so I can help people see or understand things they might not have thought of. And they need to be open to feedback and not offended if I push back on some assumptions. They may say, oh, I can live in the house. And I'm like, no, actually, you can't. That just isn't going to work. So you don't have to know everything, but you have to be willing to treat this like a real business decision and not a lottery ticket.
Right, exactly. So, if someone listening is really interested and they think this could be a good option, what are some of the first two or three smart steps that they should take before reaching out to anyone?
I'll give you three for that. Step one, get clear on your big picture goal. Do you want to fix and flip and sell for chunks of cash fast? Or do you want to build a rental portfolio for long-term income? Many people, if they have bills to pay, they start with one and then transition into the other. Or if you're more interested in possibly becoming a lender someday, well, again, that might be something down the road. Or if you've been saving money and you're not satisfied with having it wherever you're holding it right now, and this is an interest to you, maybe you want to become a lender. So you don't have to lock any of these in forever. Many people are doing all three, but a general
Right.
direction helps to shape that kind of funding. Step two is start getting familiar with the real numbers in your area because they change from area to area. Even I live in Minnesota, so the metro is going to be different than outstate, and Minnesota is going to be different than Wisconsin or New York or California. So know what the properties are selling for, what fixed up properties sell for and rent for, what rehab costs look like. Local investor meetups like RIA groups or conversations with experienced agents can help with that. I'm a member of Minnesota MinRIA, we call it, in Minnesota. It's the largest group here and part of the national RIA group. So step three is simply reach out, ask questions. You don't have to be an expert before you talk to a broker. In fact, that's first conversation is a great place to start to make sure that your ideas line up with what's realistic so you don't waste time chasing the wrong things for you.
Right. Yeah. Saving time. Everybody wants to save time these days.
Mhm.
So when someone does reach out to you, what does the process look like?
For me, everything starts with a conversation. In fact, I'm talking with somebody right after this. Usually it's a Zoom because it's just easy for everyone. If you're a
Right.
borrower or a potential lender, I want to hear your story, what you're hoping to do, what your goals are. Also want to hear what your experience has been so far, what your timeline you're working with. If you're a borrower and you already have a property in mind, we'll walk through the basics of the deal together, and I have a simple intake form that we can usually complete during that first call. But if you're a potential lender, we'll talk about your capital, your comfort with risk, the types of projects or markets that interest you. I really take a lot of notes because my job, as I mentioned earlier, is to be a matchmaker, to remember your appetite and only bring you opportunities that will make sense for you and not waste your time. And from there, if it's a good fit, that's when I really get to go to work, exploring options in my lender network, looking at structure, coming back to you with realistic possibilities. And throughout the process, my goal is that you feel informed, supported, and never pressured into a deal that doesn't feel right.
Thank you so much for being here today, LeAnn. Such an informative conversation. I know I've learned so much, and I'm sure the audience has tons of takeaways that they can take from this episode. Do you have any last minute thoughts you want to share or anything, a fun story or something before we close today?
I just love all of this so much. I actually have my real estate license back from, I got it in 2020. And at first, I became a real estate agent and I just didn't love it. It was,
Mm,
quite frankly, it was painful to give up my nights and weekends. And
right.
so I put that on hold. I still hold it, however, and that really allows me to help people nationally and even internationally because of the brokerage that I'm with. We are an international brokerage. So even if people are looking outside of the United States, I'm able to connect them to an agent if that's what they need. But I'm also developing a large network of wholesalers and other people, construction people, teams all over the nation so that if they get in, if somebody buys a property, let's say in Texas, and they need something, I've got somebody for them.
Yeah, amazing. I love that so much. So, thanks so much again for being here. And to our audience, if today's conversation made you rethink what's possible beyond traditional banks, that was the point. So, private money isn't for everyone, but understanding your options totally changes how you make decisions. So, if you like to learn more about how LeAnn works with investors and lenders, we're going to include her information and her website in the show notes so you have easy access and you don't have to stay limited by one path. Sometimes the door you need isn't at the bank, it's in your network. Until next time, take care, everyone.
Have a good